Receiving secret aid from the Federal Reserve, I turn to my next guest to ask how much his bank benefited from these bailouts. Here with a very unique answer and a different story, former CEO and chair of BB&T, John Allison. John, as always, it's a pleasure. Welcome back to Freedom Watch. You and I have discussed this before. The feds came calling and said, Mr. Allen, here's your loan. And you said, I'm not going to take the loan. I don't want it. My bank doesn't need it. Thank you. Leave us alone. What happened after you said that?
Well, basically, I had been opposed to TARP, and we had I'd written Congress. I thought it was really bad long-term for public policy, and I'm absolutely convinced now that it has been bad for public policy. But the leaders of the Federal Reserve wanted the healthy banks to participate in TARP because they wanted to obscure the fact that they were trying to save a few unhealthy banks, and by having all the strong, large banks participate, they could use the story they were encouraging lending in the economy when really they were trying to bail out some failing institutions.
And you were not running a neighborhood savings and loan. BB&T at the time was in the top 20 in terms of assets in the United States of America. Are you surprised, were you surprised when we learned over Thanksgiving weekend, John Allison, that the Federal Reserve created out of thin air and loaned at below market rates $7.7 trillion to its favorite big banks in the 8-month period between September 08 and April 09, and that those banks earned $13 billion in interest on that nearly free, created out of thin air money?
Yeah, I was surprised at the magnitude, but we knew that was going on. And the argument that the Fed was very concerned about liquidity in the economy.
Right.
So they offered loans basically interest-free, both to support some banks that were having financial problems, but also to encourage healthy banks to put extra cash into the economic system. And this goes back to Bernanke, the head of the Fed's belief that a liquidity problem was the main problem in the economy, when really it was a solvency problem. There were a lot of bad loans that were made. It wasn't a liquidity issue.
Did anything good?
I personally believe we ought to have a private banking system. I'd get rid of the Fed if I were in charge. In fact, I think the Fed is second only to Congress in destroying wealth and well-being in the U.S. economy.
I wish that members of Congress would accept your wisdom on this. Did anything good come from TARP? Did all this force-feeding the banks money, the big banks crying poverty in public while they're receiving trillions in cash under the table, which I think is a form of fraud, did any good come from it? Did they lend it out? Did it save liquidity? Did it save people from going down the tubes? Or did it just enrich the people to whom it was distributed?
Well, I think it may have saved some financial institutions, kept them from failing, but I don't think that's good. We have a bankruptcy system in the United States. Probably everybody watching this show has flown around on bankrupt airlines, and you didn't realize that when you keep companies in business that have been making bad investments, they just make worse investments in the long term. In my career, Citigroup has failed 3 times, and every time they've been bailed out, and every time they've gotten bigger and worse. And the reason for that, if you have an implicit government guarantee, the incentive to take excessive risk in the good times is huge. And that'll happen again. In 15 or 20 years, Citigroup will fail again unless we change the incentive system.
At the outset of the show,
I think that's really even worse out of TARP, though. You have some bad institutions. The good institutions get hurt because the bad institutions don't go out of business, right?
Okay.
You keep doing the dumb stuff.
Right.
And the good institutions get penalized with new, very destructive laws, like Dodd-Frank.
And the taxpayers end up paying for this.
That's been semi-nationalized.
Got it.
They talk about the current administration being socialist. I don't think they're really socialists. They're much more statist. The term fascist has a lot of extra added context to it, but they're really fascist. And the reason is, if you're a socialist and you own a company and it doesn't do well, you get blamed for it. But if you can do it in the back room and manipulate things, and if something goes wrong, you can blame the bank, then it's actually safer from a government perspective. One of the things that's really under-discussed in Dodd-Frank is the consumer compliance aspect.
Right.
Under this consumer compliance aspect, this is a radical change. Banks can not only have to get new products approved, but the government can require the banks to introduce new products. That's one of the main reasons we're in the mess we are in now, because the government forced banks into the subprime lending business. It blew up, and then they blame the banks. They're going to force banks into subprime consumer lending someday because of the altruistic policies of the government,
Got it,
that's going to
John.
blow up, and then they're going to blame the banking industry. If
John?
you want to control an economy, control the allocation of capital.
And that's
if
exactly.
you can do it in the back room where nobody knows what's happening, that gives you enormous power.
Got it. Got to go, John.
And yet you don't get blamed when things don't work out.
Got it. Thanks very much for joining us.